Yeah, I'm still quite optimistic. You're right. It's trivariate, three variables. We look at the world from fundamental angle, quantitative angle, and a macro angle. Our view is remaining optimistic. I heard some of the folks earlier talk about exogenous risks. I agree with that those are always possible. But I think what we can focus on as investors is what are the corporate behaviors. What would make me more negative or cautious would be if I saw hubris or debt, more signs of management arrogance gone awry, too much capital spending, too much inventory, too much hiring at the top of the cycle. I don't think we see any of that in really anywhere in the market. So I don't see a lot of impediments to earnings growing. The biggest risk I would see would be if you start getting input costs and labor costs offsetting revenue growth for companies. So I'm pretty bullish. I think it's a very simple logic, which is earnings are growing, the economy is growing, the Fed's there, and there's fiscal stimulus. And if you want to fight that golden quadrangle, go for it.
Yeah.
But I don't.
All right. Well, I think you're basically along with the other four in looking forward to a pretty good second half of the year, and also, sort of not buying the conventional wisdom that the risk has to be inflation or the Fed or the COVID or whatever.
I think the risk is actually on inflation is that actually it doesn't happen and people start fearing disinflation or deflation again. That's probably more of a risk because most people I talk to, actually I can't think of very many who, most people think the 10-year yield's going to back up. There's a few exceptions, but I think most people do. And so they're positioned in sectors and stocks that will benefit if that continues to happen. So I think a risk could be you're sort of offsides on that, where maybe you're making a value bet, and on both sides of your book you're offside. So I think those are the biggest risks. Probably inflation doesn't happen the way people think.
Let's go to your thoughts on FANG M being Microsoft, I guess, in that category. And you have some interesting thoughts here about this group of stocks and what role they play in a portfolio. Explain your sort of nuanced position on them.
Yeah, look, it's 22% of the S&P 500. So if investors are benchmarking themselves to the S&P, I think you have to own a chunk of them, and it's a risk management decision, not really a alpha decision. Everyone I talk to, most people are bottom-up stock pickers, but I don't really think that's sensible logic on Facebook, Amazon, Apple, et cetera. Why? Because I can explain 70 to 80% of these stocks returns from a simple macro model. What's left over, I can't replicate, I can't hedge. So it's very, the macro part isn't explained consistently by anything like dollar rates, oil, or spreads. So I've got this beast that I can't deal with. And I look at the risk and I say, well, the drawdowns haven't been that high for FANG M relative to the top 5 stocks in other sectors. So I think I should own it. They're incredibly well covered, very, very optimistic. I think Amazon's got 54 buys, 0 holds, 0 sells. So these are very well covered securities. Hard to say you have a differentiated edge from the bottom-up perspective. So my view is FANG M is risk, not alpha, and you should just own it in market weight. Maybe you own a little more of one, a little less of other, but keep your approach close to the benchmark and then make your bets elsewhere.